Hello everyone. My talk will be in English, and we'll be discussing the principles of valuation, but a lot of my presentation is how to organize your game and how to think about your game so that it can appeal to a more international audience and think about building a company, not just building a game. So we'll be going over pretty much why we're all here together today, because this gaming market is a growing market, and we're going to be discussing why we as financiers believe in the gaming market. We'll be talking about the main topic, which is valuation principles, and how we'll be going about them. I'll be giving some practical models. Don't worry, not too many Excel sheets. And understanding investors. So I come from the investment world. One of the most elusive thing, or the least transparent things that you'll find there, is how investors take decisions. And I'm going to try and uncover a little bit what it's like when us as investors are taking decisions on whether to back a company or not. So a little bit of an ego slide here, big picture of myself. But who are we at BITKRAFT Ventures? We're an $800 million US fund. We focus on the intersection of gaming and esports, interactive media, and we also have 2 dedicated Web3 funds. Myself, I've been working with startups now for 7 years. I've always believed in entrepreneurship. I think it's a fantastic career path, and game development has a lot of attributes that are similar to it. I've helped raise more than 25 million in investments for startups, but in a previous life, I was part of the evil corporate world that used to give tax advice to people, to international clients. The reason why we believe gaming has so much potential is probably the idea that the next generations have grown up loving, building, and feeling identified by games. So as these new generations start becoming part of the business world, start taking business decisions, we believe there's going to be even more interest and power behind this gaming industry. And even when you look at the youngest generations, something I like to do when I go to a new hotel is open up YouTube on either the television or the handheld that they leave in the hotel room. And what you'll find all the time is that some of the recommended videos are always things to do with gaming. Gaming is popular culture, gaming is taking over the world, and we see this tidal wave of interest always increasing as each generation comes into the market. On top of that, we've had a good track record, right? So even when there were financial crises in the world, gaming continued to perform. Gaming is now part of one of the most interesting entertainment industries out there, or verticals out there. And what more, gaming is starting to take over these industries. Not only is it influencing, but it's also lending its technology to those other industries. And even when you compare it to long-lasting culture, things like sport, gaming is taking even more audience share, even more attention share, even to stalwarts such as the NBA and the NHL, but it's still behind things like the NFL and soccer. But if you ask kids nowadays what they want to become, I'm sure you've read this, they say they want to become YouTubers. So YouTubing has taken over becoming an astronaut in the minds of the youngest generations. You may have seen this slide, you may have not, but why I enjoy it so much is because it shows the ebbs and flows of how this market is expanding. What I like to point out is how the different business models, as well as the different devices and platforms on which games are built, has shaped and formed the industry over time. As you can see, that big red space for mobile, how it changed the ways people interact with games, the accessibility of games. Think of a continent like Africa. They don't have access to consoles, but they absolutely have access to smartphones, and that's impacting a lot on the revenue share for games, and it's also introducing new ways to make money through gaming. Like you see things like free-to-play emerging, which starts to dominate, and then you monetize through in-app purchases, as opposed to the old way of doing things, where you prepare a game, you put it on the shelf, maybe people buy it, maybe they don't. Now we're making accessibility the prime order of the day. People access the game, and then they choose to transact on the game, ideally not by influencing the gameplay, of course, but by doing things like cosmetics and personalizing the game experience. I'm sure you've heard all this, but I think this slide is fundamental when we're trying to understand the market. So what has influenced the last few decades of gaming? First of all, it's content, right? We all believe content is king. It's going to remain number one, and it's going to be the most important. And we've seen different types of content out there: esports, highly interactive games, highly communal games like World of Warcraft, and of course Fortnite, which is starting to breach the divide between what is popular in the gaming world and what is niche or what is just development focused. Platforms allow more and more people to access games, to interact. I think community is huge in gaming, and it's going to be a massive influence in what gaming becomes going forward. Games that build for community, I think, are going to have stronger mindshare and stronger influence in the market as we go forward. Infrastructure is key. You cannot build a game or you cannot build a larger game unless you touch on these huge infrastructures, and we're seeing new ones come in. VR and AR come to mind, but also blockchain, which we'll be talking about a bit later. So it's important to understand how infrastructure, building on this new infrastructure, might give you an edge in the market. We just had Mauri here explain the challenges, but the opportunities given by the VR market. And then, as I mentioned, there are the different business models that are changing and evolving. As I said, it's no longer you put a game with a publisher on the shelf. Will people buy it? Will people not? There are different ways to go to market. There are different ways to expand your game, such as the Roblox model with UGC, user-generated content, bringing your community into developing added value for your game. That's priceless. But also, we've seen the dominance of the mobile game market, and maybe to a certain point, a saturated market. It's very, very, very difficult to gain market share in the mobile space. So we're seeing a lot of new generation games building in other spaces. And what do we believe to be these other spaces? We heard a little bit about AR and VR today. As of next year, we're going to have many, many more devices in the market by leading companies such as Apple. It's no longer just Mark Zuckerberg's world, but actually others are coming into the space. One of the most attractive spaces for me from a technological and creative space is artificial intelligence. And here we're not only thinking direct gameplay, but also things that influence the experience of a gamer in the game. So for example, one of our investment companies called InWorld, it focuses on the AI personas of your NPC, your non-playable characters. So if you're like me, you like exploring these open worlds. I spend hours of time playing the fishing game in Red Dead Redemption. I waste a lot of time. Now imagine you can spend hours of gameplay talking to the people in the village. Why? Because these people have characters, they have personalities, they have lives, and AI is helping really bring to life these new worlds. More on the infrastructure side, we're seeing cloud, which will allow people to access games on more and more devices and even change the way we play, right? So imagine a world where it is the AI that is the protagonist of the game, and we just influence what is happening in the world. And that will allow more and more people to be in the same game space at the same time and creates different dynamics of how we play. 5G connectivity, it's essential. And just a few moments on crypto and blockchain decentralization. I think the early attempts in this space have gone already a bit sour. The play to earn is the most infamous of them all. But it doesn't mean there isn't a long-term possibility over here. Think about the way you monetize your community or how community feels part of your game. In the past, people might be the supporters of your game, but all the economics, all the monetization goes towards the publishers, goes towards developers. What if you can bring in your community and make them participant in the development of your game? So when your game develops, they can grow alongside you. What about rewarding mechanisms for people who add value to your game, such as modders, such as content creators? These are all things that the crypto space might be able to do if done correctly with the right motivations in place. Yes, there has been a lot of speculation. Yes, there has been a lot of financialization of the space, but we're seeing a lot of new engineers coming in. We're seeing a lot of successful company developers and game developers moving from traditional gaming into this space. So wherever you sit on the fence, I still think it's a space to be watched, whether you enjoy it or not. I think it's something to educate yourself about. Going on more to what the main point of the topic is, valuation, let's try and discuss what we need to consider when we're thinking about the financial value of our company. Okay? So first of all, we'll be discussing what do we need to think about. Right? Secondly, what the result of our thinking will lead us to. And finally, how do we negotiate when we do meet with investors? So for me, it's as simple as this. As a game developer or as a studio, you need to know how much it is going to cost you to get to the next fundamental phase of your business, whether it's a vertical slice, whether it's a pre-launch, whether it's a launch, whether it's a Kickstarter campaign. You need to understand what it's going to cost you. That is something that you need to do internally. You need to figure out for yourselves. Let's say, for argument's sake, I need 1 million to raise for my company. The next part is where it depends, right? It depends on your experience as a team, whether you're a first-time founder or a serial entrepreneur. It depends on how much interest there is in the market for your space. It depends on how much cash your company has. And that will provide whether you're on the high valuation spectrum, therefore giving up maybe even as little as 5% in your company, or whether you're on the lower end of the spectrum. So for an investor to join you, unfortunately, you have to give up a high percent of your company. So that range between 5 and 30 might sound wild, but actually it depends on a lot of factors, and we'll be trying to touch upon them. But let's say you manage to raise 1 million for 20%. We call that a 5 million post-money raise, meaning my 1 million that I invested in your company is worth 20%, and therefore the full value of the company, if you multiply those, gives you a 5 million % post-money, which means the pre-money, just to use some technical terms, was 4 million plus 1 million equals the post-money of 5 million. So pretty much when it comes to valuation, if you understand this, you've understand a major part of it. The rest starts getting a little bit technical, but that's the main thing you need to know. I always believe that finance is a human relationship game. And these are the factors that affect that human relationship. So first of all, it's the number of buyers. We've all seen videos of auctions. We all understand how auctions work. If you have one person bidding, that person has all the power. If you have multiple persons bidding on the price, on the valuation, then it's the developer that has more of the power. So the power swings depending on how much interest there is in that particular startup opportunity, investment opportunity. The second part is the market heat. Again, if you spoke to someone in crypto in 2021, early 2022, they felt like kings, they probably raised money at incredible valuations, and then all of a sudden the pendulum swung and everything got cold, right? So market heat is an important factor. So if what you are building is in an exciting space, and ideally you're a prominent figure in that space, you're going to get a lot of interest in your company. So that means that you can value your company at a little bit more favorable level. And the last one is the cash availability. The saying goes that you should raise money when you least need it. And that gives you a strong negotiation position. So if someone comes with an offer that is not favorable, it's not something you're willing to accept, you can wait for others to join the party. Whereas if you're cash-strapped, if you really have no way to wiggle room, unfortunately, you might end up taking a deal that you don't enjoy. So it's very important to understand how to prepare for these levers in the negotiation, which is what I'll be trying to touch upon a little bit further. So how do you become investment ready? I enjoyed having Mauri ahead of me because he showed to you the business thinking that has to go into the fact of building a game. So having a great game, having fundamental good game development principles in there, having an enjoyable game will remain the core. No one's denying that. But being able to think in a business mind, being able to mingle with people, being able to be out there, be excitable, have people talk about you, is going to go a very, very long way. So the first point, traction, if your game is still very early, your numbers are going to be low. But at least when people play your game, they enjoy the game. So you need to see how many hours they spend playing. Do they bring people to the game? Do they attract others to the game? So try and find those little crumbs of data, those little crumbs of information that will add value to show that there's excitement happening around your game. The second point is marketing. Now, marketing, we might immediately think about user acquisition or paying Facebook or Google to create attention. But actually, it's being where your final user is. It's being in those spaces, in those networks, in those forums, in those conferences where your users want to be. And most importantly, getting them to say good things about you. One very underestimated resource are other developers in your space. I may not know the full market. It's impossible to know the full developer market. But if I speak to a developer who I trust, who I know, who has built a great game in the past, and they are saying great things about your startup because you've spent the time to build that relationship with those people, that's going to go a very, very, very long way to me spending time evaluating and thinking about your company. So marketing is not how much you pay Google and how much you pay Facebook, but it's also the reputation that you're building in the space that you're occupying. And finally, it's network. Can you get influential people? Can you get people that excite other people to maybe join your board or to be an advisor of your company? This is extremely important because sometimes, again, human nature plays a huge part. We might want to invest in a startup, or we might want to investigate a startup simply because there's a respectable veteran in the industry that has said, hey, I'm going to be an advisor of this startup because I believe in its potential. So your ability to attract important talent to your company, to your business, is going to go a very, very long way. Not only to prove that you're the bomb, that you're the coolest next startup, but also to prove that you can recruit, you can hire, you can motivate people to join your company. And that's a very, very important leadership indicator that we as investors really look for and really want to see. There are different types of investors, and not all of them think about investment in the same way. I don't spend too much time on this slide, but I'll just briefly go over them. So bootstrapping is probably what most of you are familiar with, right? So you don't take any fundamental external finance. You run the company on your own. You self-publish on your own. So that means you take all the creative decisions. It's risky, but if it pulls off, of course, that allows for the best ultimate outcome. Angel investors are people who use their personal money. And here, this is the key differentiator. They are investing in you because they believe in you, because they're excited about what you're building and they want to be part of it. They do have financial interest. If they give you 10 euros, of course, they prefer to get 50 back rather than 2 back. But mostly, they're interested because they want to see what you're thinking about, what you're developing, come into fruition. Venture capital is different. Venture capital, we are using other people's money to take bets on what the future will look like. And we have promised those people that we will return their money and then a significant profit. So whenever you take money from venture capitalists, you need to think big or go home. So I usually say that if there isn't a critical part, a real understanding of how your company can one day, in the near future, meaning 5 to 6 years from now, be valued at $1 billion, usually you're not market for venture capital firms. Why? Because when you invest as a venture capital fund in a startup, over the course of your portfolio, you invest in around 20, 30 startups, but you only expect 1 or 2 of them to be successful. And those 1 or 2 have to be so successful that they return all the profit for the fund. And in order to do that, you're looking at a $1 billion company or a company that makes up to 100 million in revenue per year. And I'll be showing in later slides what characteristics those type of companies have. Crowdfunding, we mentioned Mauri. The key here is market appeal. Can you show your future users, your future backers, what you're doing upfront and be attractive from a marketing perspective? Some companies are good for crowdfunding because they have a high market appeal. Some others are too complex, too technical, so they don't have so much market appeal. So you need to understand. And finally, token economics. Again, I mentioned it earlier. Can you find early adopters who want to put money in your business who want to participate not only in the governance of your company, but also in the utility, play the game, develop the game, become leaders in your game world. And then, because they would have invested earlier, because of the tokens appreciate in value, they might get financial returns from participating in this industry. It's still a new way of building businesses, but we're seeing a new formula for doing this successfully. Hopefully, the future will prove that this is yet another opportunity for startups and company developers to consider. Each of these investors might come to you at different points in time. So initially, you have friends and family, you have business angels, you have incubators and accelerators. But as you start increasing in value, as you start increasing in appeal, basically different investors will come knocking on your door to show interest in your company. Also, the valuation matches the different stages of development. Usually when you hear about seed stage startups raising these crazy amounts of money, like 10 million at a 50 million valuation, it's because they've already had success in the past. For most companies, it's going through the different levels at different points in time. And it's about understanding the milestones that are needed to get through the different phases. How to be investment ready. I'm sure you've heard tons of pitches of how to prepare a pitch deck. I'm not going to go into that. Instead, I'm going to go more into the second box, which is what do we generally look for at the different stages. In the seed stage, we look for a team and a dream, how these teams work together, how coherent they are, what have they done in the past, and that's very key. Understanding, even if you've never built a game and been super successful in the past, have you worked for someone who had a successful game? Have you been exposed to what it's like to build a game? The biggest risk investors have when they invest in games companies is not that the game will fail, that's something we accept and understand, but that you never launch the game, you do not execute. So execution risk is probably one of the most important things that we look out for, and we try and make sure we have confirmation on when we put money into a company. The vision, of course, I'm going to go into that a bit later, is what we believe is the potential outcome of the company. Moving on to the other sections, focusing on Series A, the main difference then at Series A is you need to start seeing some metrics. You need to start seeing some numbers. You need to start seeing a community that's excited and that's growing around the game and around the game studio. I won't go into the later ones because I think it's all about growth, it's all about revenue, it's all about margins, and that can be a presentation for a later time. So if you were to open a finance book, you'd get things that look like this. Excel sheets of explaining how do you arrive at valuation. I still believe what I told you earlier is the more important aspect. How much do I need to raise, and are people willing to pay for it? But there are methodologies if you want to do an Excel sheet exercise. You could calculate how much time it's going to take you and what number of developers you need to get to where you want to do. So that's the development cost methodology. And you can also do a valuation calculator where you say, if they invest so much and my company grows to this level, this is the type of return I can expect. But if you look at the risk factor that I have there of 40%, how do you arrive at that risk factor? Nobody knows. That's a magician's job, right? Especially in this kind of market that we have today, where markets are going up and down and swinging like crazy week after week. So even these Excel-based calculations, they have a lot of subjectivity and a lot of things that cannot be measured accurately. So what we as investors do is basically one of the main advantages that we have is we get to see hundreds, if not thousands, of opportunities per year. We invest in less than 1% of the startups that we see. And what we're doing, besides evaluating the potential investment in that startup, is we're collecting data on what types of games and what types of teams, what types of industries are raising what type of money, at what stage, and what valuation. So even if we don't invest in a company, but another fund invests in that company, we can take a note and say, okay, this company raised 2 million at 8 million, and it had a strong team from the US, and it was building a first-person shooter in VR. So we start evaluating that data, and that is how we get an understanding of what type of valuation we should be willing to pay for what type of games. How do you, as game developers, do all this? As I mentioned earlier, you speak to other people, you speak to accelerators, you speak to advisors. They will be able to get you the data that you need so that you can more or less get it right. But mind you, we've had conversations where the founder came to us with a valuation of 40 million, and then we later invested at 20 million. We negotiated down, but we still invested, so don't worry about getting it wrong. And we've also had situations where we started the conversation at 20 million, but we actually invested at 30 million. Why? Because other people came into the round, and the founder was able to negotiate a higher valuation. One word of advice is bigger isn't always better when it comes to valuation. Why? Because if at a later stage you don't execute on what you promised, it is very, very hard to find someone willing to pay the old overvalued price. So that is something that could be a startup killer, so be very careful about raising too much money at a too high valuation. So the last slide I want to go through, and I had the presentation that I did with ISEC, who's an organization by the Spanish authorities to help raise money for games companies. And I did the presentation where I go into this in quite a lot of detail. But basically, I'm not from the games industry, so I've only been working professionally in games for 3 years. So when I come to events like this, I meet people who have been in the industry for 15 years, 20 years, so I get a little bit nervous. But what I can offer that maybe not others see a lot is the conversations that happen behind closed doors where we discuss what makes a great game, what makes an investment opportunity. And over my 3 years, I've been observing this and taking notes, and I believe I can divide them into 2 main categories. Things that are observable, you either have them or you do not, and things that are intangible, where you need a lot of belief. The team ultimately has to believe versus not believe in your startup, in your game, in your project. Okay? So and you as a startup, you don't need to have them all. You need to have a nice mix of things that make the investors want to invest in your company. So these include having a stellar team, and I mentioned earlier, execution is key. Can you prove that you are going to finalize what you've set out to do? You have a category-defining vision, something that's very exciting, something that's very new, something that's different. And it could be a venture opportunity, right? So many times we see games that we like. It's an interesting game. It will be a fun game. It will have commercial success. But it's not a venture capital opportunity. It will not go on to make that $1 billion valuation that I mentioned earlier. So it's a bit disheartening sometimes to tell a great startup that we're not going to back you, even though we believe their game is an exciting one. The technical hard edge, are you building in a new space that has not been built in before, so therefore you're really doing something that no one has ever done and using technology that no one is used to using? There's a way to make money from it. Sometimes there are things that are hobbies, but there isn't a clear monetization path, and how much it's going to cost you to launch. On the intangible side, it's the market inflection point. What has changed culturally, technologically, and from a regulatory standpoint that will influence why we'll invest in your company or not? Unproven uncertainty is really, can anyone tell that your success is going to be a failure or not? Anyone can say that if what you're doing has been done in the past. So therefore, we can say this is more likely not to work. But if you've mixed it up enough, if you're using enough new technology, if you're really working on the edge, no one can confirm whether what you're going to do is a success or not. So therefore, we might be interested to invest because it's so new and different. Finding the fun, that's something clearly that is soft. Give people hands-on experience of your game, give them a playable, give them a demo, so that they can feel the fun, so they can get excited. And finally, as I mentioned before, strong expert reviews. Get other people who are influential in the market, who are important in the market, to say great things about your game, about your company. This is extremely important and extremely influential to getting that yes from investors. So that's all from me, and thank you very much.
Tenemos tiempo para una única pregunta.
Vamos, no seáis tímidos. Bueno, en cualquier caso sabéis que Adrian va a estar por aquí.
Yep.
Le podéis parar para preguntarle si queréis algo. Thank you very much, Adrian, for your time and for your presentation.
Thank you.